Welcome back to Halftime Report. There are plenty of stocks that are moving around, so we thought let's just, talk about all the buzzing stocks and get you some opinion as well. Don't lose sight of the market, which is now at the lowest point of trade. So Prakash Diwan is joining in. Prakash, first a word on Tata Steel, right? The big story of the day. The management told us that there will be 1,500 crores of cost savings because of this amalgamation. But we all know that the problem still persists, right? I mean, steel prices are under pressure, demand is not that great. So what do you do with Tata Steel now?
Good afternoon, Sonia. So, I think the immediate reaction is going to be a little bit negative, if you ask me. While this whole reset is EPS accretive, typically what happens is every time people end up getting shares of a company that you originally didn't want or you didn't own, there is a tendency to kind of get out of it. And what makes Tata Steel also complex after this entire this thing, while there is simplification as an objective, is the fact that the PE multiples to some of these businesses like tin plate, Tata Metallics would have been far richer. What you get for a Tata Steel is more commodity conversion, and then that will probably continue. So yes, there will be some pressure, but on metals as a whole, I think there's a very clear immediate pause that we've seen in terms of price action, in terms of the export restrictions and all. But eventually, the commodity cycle will kind of take off if the recession fears are not deep enough, especially in Europe and US. Given the fact that China also is not being able to ramp up production as largely as was anticipated earlier. So I'm quite positive on this space, but it will probably take some time for this consolidation in the sector and for this company specifically after these transactions are over to happen. But you don't have to miss out on Tata Steel as a pick in your portfolio for sure after this. You get so many of these good businesses coming together in one stock, which is remarkable.
Okay, it reminds me of fixed dose combination. You get multiple drugs in one tablet. But nonetheless, Prakash, I wanted your thoughts on M&M Finance. The fact that they can't use third-party recovery agents anymore. Stock is down around 11 to 12%. We've got clarifications from other companies that, Shriram Transport doesn't have any kind of exposure such as that. How would you approach M&M Finance? Do you think that is now going to underperform because of this simple reason, which is going to play out in the next couple of quarters?
Yes, Ekta. So, it's definitely a setback because 60 to 70% of collections for this company happens through third-party sources. And, the cost efficiencies of being able to manage multiple geographies, collections in multiple geographies is only possible through third-party businesses. You cannot expect that to happen with people on your own roster. And that's precisely why there's a huge difference in the way a Shriram Transport would do its business as compared to an M&M, which is into much more smaller locations, much more deeper geographies. And my submission in this is that there will be a solution to it with an added cost, right? So you'll have to live with that in terms of the recovery. If the recovery doesn't happen, then it's a significant balance sheet issue. But I don't think a company is as wise enough as M&M Financial would let that happen. So this is like the Maggie moment for M&M Financial. I mean, the business is good. They are expanding. This is a setback. They will have to spend on it. You know how Nestle had to do so much to overcome that debacle. It might be not as long drawn as that, but I'm sure they will take some time to get over it. But during that phase is when you get it at a softer valuation, and for long-term believers, that would probably be the opportunity.
So are you buying the dip on M&M Financial? And also, because of this issue with M&M Financial, we've seen a decline across the NBFC space in today's trading session. Case in point, Chola Investments is down about 5.5% odd. We have Shriram Transport down almost 4% odd. So it's basically soured the sentiment, so to say, in the space itself. Would there be any attractive bets here, according to you?
So, Manglam, it definitely, this has happened with one company, which is unfortunate. The incident is definitely something that kind of calls for caution, and there could be a possibility that RBI might believe this is to be extended to everybody else as well. So that's one of the reasons why there will be a little bit of a time that there'll be some sort of a cost and time cost that will be incurred by most companies to to set this off, right? The non-availability of third-party services. So from that perspective, you are getting that entry point in some of the good companies. To my understanding, Shriram Transport, Chola with such strong balance sheets definitely offers so much. In fact, Shriram Transport Finance with the pre-owned commercial vehicle segment revving up so much when you look at Ashok Leyland numbers, when you look at the overall logistics change that is happening. I think there's definitely great opportunity in those companies, but you cannot expect a recovery to be immediate. So if you buy today, you can't sell next week at a profit. You'll probably have to look at holding on to this for at least the next 1 year, one and a half years for all of those to play out. But I definitely like that space. It's far better than the gold financing and housing finance companies at this point in time.
Okay. Prakash, we were trying to get you on board, but you were traveling yesterday to discuss your thoughts with regards to Fortis. Would you buy that stock, or would you probably stay away? Would you buy it because of the fundamentals, the fact that the hospital business is improved, or would you stay away because of this entire amount of uncertainty on the open offer, which is now in its 4th year running?
So I think the issues.
Okay, Prakash.
I think it's a Fortis issue, because yesterday we asked him the Fortis. We tried him on Fortis and there was an issue, and now you asked him the Fortis question and there's again a scratchy line.
Maybe he just doesn't want to give his view on Fortis, guys. Can't you understand that?
Well played there, Prakash. Well played.
When technology supports you, right?
Yeah, some higher power for Fortis at this point.
Okay, he's back again. No, Prakash, we were asking about Fortis. Yesterday we couldn't reach out to you, and now as you started answering, there was an internet issue. Is it because you don't want to answer, or is there a higher power?
Okay, well, we got the answer to that, right? He doesn't want to answer, guys. He doesn't want to answer it. Okay, but just don't lose sight of the market. It's tanking, and how.
Yeah.
Just look at that. The mid-cap index is now down almost 500 points. The Bank Nifty is down almost 1,000 points. And it's not stopping at this 17,400 level. That could get breached anytime soon. It's an across-the-board secular move. So M&M, IndusInd Bank, HDFC Bank, Axis, all the gainers of the last many weeks are seeing some profits being taken off the table. So don't lose sight of what's happening on the screen.
When the market broke that 17,430 mark, which was the Monday low, it's only then we started accelerated selling. And now if we have to look for levels, the next level of support comes in at the 50-day moving average, which is 17,315. So the question is whether we go there or not. And as we speak, it's sub 17,400 for the Nifty itself. What we'll do is actually take a short break, come back, get you more on the markets and individual stocks, because a lot is selling off as we speak.